The events of 2020 have changed the way mortgage applications are assessed dramatically. In this video, I discuss the best ways to submit your mortgage application in 2021 as a first-time buyer. Let's go. What's up, my name's Alex Kerr, I'm a qualified mortgage broker, and on this channel we provide the best tools and tips to first-time buyers. If we're meeting for the first time, please consider subscribing. Let's jump into the video. So the first thing you have to do before you do anything else is check your credit files. This is the data which the mortgage lenders are going to use when making their decisions to lend money to you. So it's vital to know what's on your credit files. The mortgage lenders will access your credit files via three agencies: Experian, Equifax and TransUnion. You have to see what's going on all three, because if the data differs, you're going to be none the wiser. You may be checking Experian, the lender may be checking Equifax or TransUnion, and if the data's different, you may have an unexpected result. You can either download each report individually from each credit file provider, or you can go to Check My File, who provide all three reports on one file. The link's in the description. The next element to consider prior to an application is your employment status. Are you employed? Are you self-employed? Have you had any employment gaps? Have you been furloughed? Have you been made redundant? Have you taken self-employed grants? Have you taken a business bounce back loan? All these things are going to affect your mortgage application. If you're on furlough, the mortgage lender is going to want to see a letter from your employer confirming your return date. If you've got any employment gaps, ideally you're going to need a 12-month employment history before applying. If you're self-employed and you've taken grants recently, the lender's not going to accept you. The lender's going to want at least 12 months or so before your last grant was taken. If you're a limited company and have taken a bounce back loan, the lender's going to want to know that you can afford the bounce back loan payments on top of your profits and salary. Some lenders won't take your application if you've had a bounce back loan. Bank statements. Traditional criteria will mean the lender will take your last 3 months bank statements and look for salary credits or income via business activities. On today's market, they're looking for a lot more. Have you taken any grants? Have you got any bounce back loans? Any type of housing elements, working tax credits, universal credits? These all affect your application. Most lenders won't accept you if you've taken any housing benefit within the last 12 months. Payslips. Not only do they provide how much you've been paid and your net pay, which needs to reflect on the bank statement going in, they're now checking for furlough payments on your payslips as well. Voters roll. Make sure you're on the voters roll, really important. And when you're checking your credit file agencies from the three providers, make sure your records show on each one. It's no good Experian showing your voters roll but Equifax not. Because if you go into a lender who uses Equifax, from their point of view, you're not on the voters roll. It's vital to check all three reports. Proof of deposit. This is a really big area which a lot of applications will fall down. You've got to be able to show every single penny of your deposit and where it came from. If you've got £10,000 that you're putting in as a deposit, the lender will want to see the balance at 0 and the balance at 10,000 and all the transactions in between. If you can't provide that, they're not going to lend to you. They're not going to lend to you.
They're not going to lend to you.
If you're getting a gifted deposit from a family member, make sure you check the lender's criteria. Not all lenders will accept gifted deposits from a non-blood related family member. So if it's a cousin, some lenders will and some lenders will not accept that as a gifted deposit. Some lenders will insist it's from a blood relative. Make sure you check that. Using a personal loan as a deposit. There are currently 2 lenders that will accept using a personal loan as a deposit. We do not give out these lenders' names because we do not want you applying on your own, because this is a complex process. The lender will ask for the personal loan payments at the point of application, and it must fit within the affordability, not only the mortgage payments but the new loan payments as well. We have our own policy on this. We only help people that are putting a minimum of 5% in as a deposit and no more or no less by the use of a personal loan. It must come from a personal loan provider that are happy to lend for the purpose of a deposit and buying a home. A common personal loan provider at the moment, as of the time of this video, is Tesco's, who will allow a loan to be used as a deposit for buying your home. use of a broker or bank. That is your choice. Do you want to go on your own? If you go to a bank, it's likely 2 or 3 hours per bank having a discussion around your options. Obviously, a broker can speed this process up and also provide all the options from over 100 different banks most likely. So it's best to decide which route you want to go. Today's question, are you thinking of a mortgage in 2021? Let me know in the comments. So thanks for checking out today's video. Please do check out the show notes for a recap on today's content and subscribe if you haven't done so already. Till next time, Mortgage Trainer bringing you the best tools and tips to first time buyers. Have a beautiful day. We'll see you in the next video.